Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the venerable MapDT actually portfolio, the original, booking 200% profit in just 16 days. Absolutely astounding. One of our best runs ever in 7 years. We're going to look at the market there. This is a chart of the mini S&P 500 futures contract, last print of 1093.50, call it 75, and looking at a big down day. This, of course, is Thursday, the 29th day of July, 2010. Kind of looking at an inverted head and shoulders, bit of a deformed inverted head and shoulders formation. So the bulls are going to try to rally here a little bit, given the impressive cascading waterfall decline that we've seen following the gap higher open on the early session. Really impressive. The moves are getting choppy, but very extreme moves, which certainly allows us to profit handsomely, as you can see from the 200% gain that is, of course, for the MapDT and is our leading gain of our primary futures portfolios. But nevertheless, on an intraday basis, we're looking at our proprietary indicators here, and we see full all-out bearishness now after a rather extreme bullish bias. We even had some green bars here on the bullish side. Bullish, 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 a little bit of bullishness, bullish, bullish. So actually the bulls were certainly in control, but really the market just couldn't sustain it given on a daily chart. We're going to look at the 200-day SMA. Which we usually don't use the SMA, but we certainly need to be aware of it, and that's really why we didn't switch our official market timing to bullish, but we have actually, as of just today, at 1098 in the cash market, we'll call it 1094 in the S&P market, switched our official market timing bias to neutral. So we are neutral now, and of course you get this video. You can participate or position your portfolios accordingly, or you can certainly subscribe to the auto trading, just $9.99 a year, and you can trade unlimited contracts in real time, have your trade executed exactly when we switch our biases on the market, which we've done so now to the neutral side, and booking about 60 points in S&P profit, $3,000 on one single S&P 500 futures contract at $5,000, 60% gain over the last few weeks, we'll call it, on just a free market timing signal, which of course would be $9.99 a year, about $100 a month, actually less, and you can have that in real time. So looking at the intraday perspective, though, the bears are certainly in control. We faded the gap, filled the gap, bounced around the trend, and certainly the bears have taken over, broke below new intraday lows right here, as you can see, and the bears have just taken over as the technical confluence of so many indications. We're just going to go ahead and switch over to that. We'll go ahead and minimize this. Here's a chart of the daily market here's a daily chart of the S&P 500 market. Cash market, and looking at the last print of 1097.53, as mentioned, we closed our position at 1098 for a gain of 60 points, $3,000, and of course that switch was actually in early May, so about 3 months or so, 60% return, not too shabby. When you're talking about 240% return per annum, of course we've outshone that impressively. If you've followed our videos over the last couple of years, our official market timing has been absolutely stellar, but we need to actually update these probably because we're no longer 30% bearish, we're no longer 50% bearish, we are certainly 20% bullish, and actually we're totally neutral right now, but slightly weighted to the bullish camp. Now, having said that, this is the key measure, this is the key measure we wanted to be aware of, which was converging with the not only 1120 level, which actually happened to be right around the former swing point high. Why was this a swing point high? Well, it was a simple Fibonacci retracement that we used last time to avoid getting whipped out of our bearish exposure, and actually mentioned you could add to your bearish exposure, and look at that beautiful move lower from 1120 to 1020, over 100 points actually on the market. But where we stand now, well, we're actually neutral, but certainly weighted to the bullish camp. We've exited our bearish exposure at 1098, and just kind of waiting to see what the market does around this level. But it's certainly a great opportunity to participate, to jump in on the long side right around 1100. You have all the convergence of our key trend following measures in concert with a short-term measure of bullishness here. These again need to be updated. This was already bullish. This is now intermediate term bullish right here. A little bit of short-term bullishness here in terms of directional movement, but nevertheless the bulls will remain in control, probably above 1080. If we get down to 1060, we'll kind of take a look at things and reevaluate reevaluate. If we get above 1120, we're going to jump in on the bullish side. If we get down to 1080, a good buying opportunity, we're probably going to go ahead and jump in, or we'll just wait and see how the market dynamics play out. But right now, you are looking at severe resistance, double top right there. But look at this beautiful head and shoulders formation. We mentioned this head, this shoulder. We've now broken above that and are sitting above the neckline right here at 1100. So that supports. We have monstrous amounts of support around 1100 and resistance around 1120. So definitely setting up to be a very interesting resolution to the market. But so how have our portfolios been doing? However, there you see some beautiful winners on the ES Day Trader 1.0. Look at those beautiful winners. Huge winner, huge winner, huge winner, huge winner. One loss and countered the loss with that gain right there. Look at the Swing System 5.0, still holding the long position from 10,100 in the Dow up to 10,400 now, still 300 points in profit. And if we go back, look at this beautiful gain right here from 10,300 to 10,100, so another 200 points. So 600 points since the middle of July trading on this swing system. And if we go back and look at this prior long position that closed at around 10,250, 10,300, 10,250. Look at it, just keeps going and going and going and going and going. That's why. So 97.50, 500 points on that point. So 500, where do we say we were? 600, 1,100 points just in the month of July. It really has been a banner month for trading in the month of July. And we're going to go ahead and look at how our portfolios have done. 200%, as mentioned previously, is the gain for our venerable MapDT. This, of course, is original, very aggressive portfolio, very low amount of capital, $20,000. This trades quite a few lots. I believe trades about 8 systems with maybe 2 lots apiece, roughly or so. So very diversified. In fact, we'll talk about diversification here in a second because it's kind of important, and one of the cruxes of our business has always been is we have 50 trading systems or so, 50 plus, is the amount of diversification we have. So it's really important to be diversified, and maybe a lot of you all aren't aware of how diversified we are in terms of as many systems as we do offer. Nevertheless, we're able to put up gains like this of 200%, of course, very risky, aggressive, we say. Like a moderate version of the MapDT would be a $30,000 version. A conservative version would be a $40,000. So you could easily put $40,000 in this portfolio. You'd only have a 100% gain, but certainly the risk would be cut in half as well. So that is the market or the primary futures portfolio leading portfolio, MapDT, 200% profit in just the last 16 days. There you see right there, 16 days. It absolutely has been an incredible run. Yesterday, actually, the standout was the MSAU DT, up 10% yesterday. On the 16-day, it's coming in at 151% return, 172 for the triple threat trader HR. Of course, the HR portfolios are high risk and high return. So that's kind of how it's been. That was yesterday. That was the day before, up 200%. We're up 202% now in the MapDT. Got to kind of skim through this. MapDT again, up 20%. That was last Friday. And MSAU DT gained 30% last Thursday. Here's the master portfolio. This is a $10,000 portfolio, but you can actually, you can actually trade it. It only trades 2 lots. So you can actually trade it with $5,000, but on a $10,000, very conservative portfolio right here. On a $10,000 portfolio, the max drawdown I think on this portfolio is just 50% or so, and of course it's up 65% just in the last since mid-July. Of course, last 2 weeks, up 65%. And of course, if you went in with $5,000, that would be 130% return. We are running out of time, but also wanted to show you guys this email from a client who started a couple of weeks ago in a conservative portfolio. Just wondered how many markets we traded. E-mini S&P, we trade 4 primary futures contracts. And cool, you may want to consider advertising that fact more. I know from my perspective, I thought your offerings were only going to the E-mini S&P. My initial impression there was power in trading one little contract, but your expertise was very narrowly applicable, which is not always a sign of robustness. But seeing the markets impresses me. Of course, seeing my account go up $9,000 in just 2 weeks impresses me greatly as well. So, a little bit of feedback. We always appreciate that. And yeah, we're very diversified. If you guys have any questions or interested in any of these portfolios, you can, of course, go to the website and subscribe. There's the MSA DT to the portfolios. Chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. And again, we hope you've enjoyed this video, and we'll see you next time.